Welcome, my name is Andrew Tate. I'm the Group Executive for Marketing and Growth at REI Super. Today I'm joined by Angelos Siapkis, our Group Executive for Investment Strategy and Operations. Together we're going to take you through how our investment options performed last financial year and some of the factors that drove those results. So Angelos, let's cut to the chase. Our members would really like to know how our investment options performed in the 2025 financial year. Perhaps you can go through some of the headline results and also some of the factors that drove those outcomes.
Thank you, Andrew. Despite significant market volatility, all REI Super investment options delivered strong net investment returns this year. Our balanced MySuper option returned 10.3% for super members and 11.4% for pension members. Our growth option returned 12.5% for super and 14.1% for pension. And Growth Plus, our newest investment option, which launched on 1 July 2024, delivered 14.2% for super and 15.1% for pension. In terms of the key drivers of our balanced option, the biggest contributors to performance this year were listed shares. International shares rose by 18.5%, significantly boosted by a weaker Aussie dollar, whilst Australian shares climbed by 13.7%, helped by falling interest rates and inflation.
There was significant market volatility in the June quarter, particularly following the US tariff announcements in April. So how did markets respond?
Initially, share markets fell sharply, caused by the uncertainty around the US tariffs and the potential impacts on the global economy. But this was short-lived and they recovered by 30 June. The delay in tariff implementation, along with some central banks, including our own RBA, cutting interest rates, contributed to the recovery. During the June quarter, international shares rose by 6% and Australian shares rose by over 9%. Our balanced MySuper option delivered a net investment return of 4.6% and our Growth Plus option delivered a return of 7.8%. Whilst at the other end of the spectrum, our cash option posted 0.9%. This shows the risk of trying to time the market, which can sometimes result in missed opportunities. A member switching out of Growth Plus at the start of the quarter into a more defensive option like the cash option would have missed out on almost 7% performance.
So how long did financial markets take to recover from the tariff announcements? And how does that recovery period compare to previous shocks like the GFC and COVID?
Great question, Andrew. History has shown that financial markets tend to rebound after a shock to the system. Following the GFC, the Australian share market took 5 years to recover. Post-COVID, the recovery time was just over a year. The sharp fall seen recently in both the Australian and US share markets just took 3 months to recover. Although the current trade tensions are not over yet, we understand market volatility can be unsettling for some members. Reacting too quickly can mean missing out on the market recovery, as we saw in June. Staying the course and seeking professional advice is often the best approach.
Many of our members may not know about all of our investment options. Can you explain our different investment options and what each one aims to achieve?
Of course. We offer 10 options across super and pension. 4 pre-mixed multi-sector options in Growth Plus, Growth, Balanced and Stable. Each of these investment options has a different exposure to growth assets. Starting with Growth Plus, which has the highest exposure to growth assets at 99%, down to Stable with an exposure of 40%. We also have 6 sector-specific options in Australian shares, international shares, Australian property, global property, bonds and cash. The exposure to growth assets of these options ranges from 100% for Australian shares and international shares all the way down to 0% for bonds and cash.
And Growth Plus is a great investment option for any member considering opening a self-managed super fund. Growth Plus could be considered for diversification as a companion product for those members who have a self-managed super fund or are considering opening one. So what guidance can we give to members who are trying to select the right investment option for them?
Well, it comes down to members understanding their appetite for risk, their investment goals, their life stage and their financial position. Knowing how you feel about risk can help you decide which investment option could be right for you. Your choice should align with your personal risk preferences, stage in life, financial position and desired investment goals. I would encourage our members to regularly review their investment options as their circumstances change to ensure they continue to meet their needs. And if you're unsure, speak to our financial advisors. They're here to help.
Absolutely. And you can also take the risk quiz available on our website to help you understand your own risk appetite. Super is a long-term investment strategy. So what can our members be doing now to maximise their retirement savings?
The key message is members should stay focused on the long term. Market volatility should be expected along the way. The recent market volatility, which saw markets recover in a short period of time, is a good reminder for members to maintain a long-term view regarding their investments. We recommend members to seek advice before making changes, and remember, markets do recover.
And again, our financial planning team are always here to support our members. That wraps up our 2025 financial year investment update. For those who are REI Super members, your annual statement will be available towards the end of September. For those who are considering opening up a self-managed super fund, do consider our Growth Plus investment option, which has had a great first year. And also do please consider contacting one of our financial advisors. Thanks for watching, and we look forward to you joining us later in the year.